In this video, we are going to talk about the different types of trades that we take. There are two primary types of trades. Number one is the reversal, and number two is the continuation. So a reversal trade is actually looking to catch the change in a trend and look to buy into the end of a downtrend or sell into the top of an uptrend. And a continuation trade is within the trend, so looking to just trade with the motions of the trend, like so. So a continuation trade would look something a little bit like this, and a reversal trade looks something like this. So these are the only two ways that we trade, really. They are the only two ways that we can trade. We can use them across all different time frames, meaning we can actually catch, continuation trades in small trends or big trends, reversal trades in small trends or big trends. But they are the only two ways that we trade because we're either flowing with the trend or we are getting in at the start of a trend. Reversal trades are obviously very logical. They are actually my favorite way to trade, but they have to be approached with logic, because if we are just selling blindly into the top of an uptrend, we are likely to actually just get swept out quite a few times. Continuation trades are the more simple trade, but they are not normally as exciting. Obviously, you are joining the trend midway, meaning you don't get to ride the trend for a long time. When we get good reversal trades, we can hold trades for a very long time and actually capitalize off a very big move. On the continuation trades, we are normally just looking for one leg of action. We can target previous highs, or what I actually prefer to do personally is target previous high interest points. So let's say the market came down like so, and we had a nice supply zone here. I'd actually be looking from a buy in here to actually take profits there. So continuation trades bring smaller profits generally, but they are the easier trades, the more surefire trades, and until the trend breaks, we can continue profiting from them. So first of all, let's actually have a run through those continuation trades then. We can continue to buy with a trend, following structure as we like to do, and that is what's going to be the guiding point for our trades. These trades are normally formulated after we get a break of structure. If we are in an uptrend and we get a bullish break of structure, we would actually then look to buy the higher low on the pullback for the next bullish structure push. The reason we want to always follow the structure is because if we are failing to make higher highs and higher lows, we do not want to buy. When the market shows us that we've made a higher high, that shows us that we have buying pressure and a lot of buying strength in the market, which then means when we pull back, we can happily buy back into the trend and continue the move up. On the flip side, when we're in a downtrend, we're looking for exactly the same thing. A continuation trade is first formulated when we see a bearish break of structure, or in a bullish example, a bullish break of structure. So that's what we want to see first, a new impulse. And on the correction, we are looking for logical places to buy, normally using supply and demand. Okay, so let's say we have a small demand zone form here, then we get the breakout. When we pull back, that is where we'd be looking to buy. On the flip side, if we have the demand zone down here and a large impulse, we would be looking at this area to buy. Now, with continuation trades, eventually every trend does change direction. Eventually we move either into a ranging state or we just go for a fast reversal from up to down. That means that eventually, when we are buying, we are going to buy into a trade like so. And what it's going to do is maybe pull up a little bit, but then push through. And that is going to make us lose on the continuation trade. Now, this is where trading is a big game of probabilities, because not every trade is going to work out by any means. Many trades will actually just fail, and we will take losses on those. So when continuation trading, you need to be aware of that. But what this can actually do is then push us into reversal mode. If we see some significant structure break down, so we go from higher highs and higher lows to a lower low, what we could then do is look for the supply zone that formed the downside move, and we can simply look to sell when the market comes back in. So when we take a loss on a continuation move, it is not always a bad thing, because it means we can then get a sell or a buy, depending which way the market is reversing to, in the other direction, and actually profit off that movement. So that's why it's important to be in tune with the two types of trading and not just be fishing for trades anywhere. You either need to be sure about your trade. Are you looking at a continuation move with the trend, or are you looking at a reversal? And you also need to be ready to adapt, because if the market does shift and you do take a loss on your continuations, you can actually then look for reversals. Now, on the flip side of that, let's say then we are looking at purely reversal trades for this instance, and we have a reversal setup like this. We are going to be looking for the supply zone to actually sell from. The supply zone that broke structure is generally what we look for, as we've spoken about in a couple of the previous videos. And we'd be looking for a move something a little bit like this. We are looking basically for the structure to stop shifting from higher highs and higher lows and actually break down to form a lower low, and then we're looking to sell the lower high. Now we can go for even more confirmed entries by waiting for a second lower high. This is going to be the safest place because what this does is avoid getting caught on any false breaks where we are just, sweeping for liquidity. So this is the perfect reversal setup after that second break of structure, but this is a valid setup and can get you in early in the trend. So these are the kind of moves we're looking for when we are looking for reversals. Essentially, this is a continuation trade after the reversal has formed. Reversals do have more risk because you're essentially looking for the top of a trend or the bottom of a trend. But overall, they are the more profitable trades and they allow you to hold the trades for a very long time and scale in as you go, where we are looking to add to the movement as it moves. And we can actually scale into the movements like this. Now, we'll talk about that a little bit more very soon, scaling into moves and trailing stop losses. But reversal trades do allow you to do that because we can get the initial buy and then we can continue buying with the structure. Whereas you don't get a reversal trade and you actually get a continuation, you're the one buying in here to take profits here or buying in here to take profits here, which generally means you're not going to be able to scale in your trade and grow the size of that trade as much as you would with a reversal. So those are the two different trade types. Now, when we were talking about continuations, I showed you that not every continuation trade is going to work. That is the same with reversals. It's always a game of probability. What may happen sometimes is we come in for the reversal, we get a small push down, and then the market is going to push back to the upside like this. So if you had sold in at this lower high, as we spoke about, and you got stopped out there on this movement, what we could then begin to do instead is look for continuation moves, right? Because this shows us, okay, higher high, higher low, higher high. We've had a little sweep down, but now we've formed once again a higher high. So we can look for the demand zone that formed that structure there, that new break of structure that we see here. And we can assume that the trend is going to continue for a short while or a long while because we've actually continued making those higher highs. So at this point, we would look for buys like so, using the demand zone that broke the structure. And when the market pulls back in, we would then be looking to buy that and continue it with the trend. Okay, so not every trend is going to be perfect. Not every setup is going to work entirely, but you can get a very, very good set of trading rules like this, and you can make a lot of profit with them, even when you're just running with probabilities, because you are going to take some losses. But that's the same as every trading strategy, every trading methodology. There's always going to be losses included because we are essentially running a game of numbers, a game of probability, and just flowing with a system, allowing the wins and losses to come in, and overall, the wins are going to bring us out on top. So there we go. Those are the two trade types. What I'm going to do now is take you to some live charts and show you some of the examples that we can see. One example of a reversal trade and one example of a continuation trade. So here we can see a continuation trade example. Now, on the chart here, we see lower low, lower high, lower low, lower high, lower low, higher high. So this is essentially buying into a reversal, but the trend is quite established by this point because we've broken quite a few structural points. Now we can see in the background over here, we have, for example, this supply zone that we could target for a buy trade, looking to just continue this bullish trend up, okay? So the reversal trades normally take place within the low structure like this. I will show an example in a moment, but for the continuation trades, we are following trends that already exist, and we can see here a very clear higher high. So what we can then do is use our concepts, target demand zones in the trend, this being the demand zone that broke this structure point here, and we could look for buys from there to actually bring to the upside. So as an example trade, if we plot it on like this, target into there, we could be looking for a movement like this to actually get us triggered in, as you can see, and then continue the ride to the upside in line with the trend. So using all the concepts we've spoken about so far, structure, supply and demand, imbalances for the targets, we can actually then formulate that into a continuation trade to continue this bullish trend up through some imbalanced price into a supply zone, okay? So that is a nice continuation trade example. And now here is a nice reversal trade, because what we can see here is higher highs and higher lows, higher high, higher low, higher high, but then we had a lower low. So we had that initial break of structure that we can see here, and that was formed really by this supply zone. So if we mark this supply zone on the chart, we could then look for price to come into this, which could then give us a selling opportunity. Now for this trade, let's target this imbalanced demand zone, and we place our sell idea like so. And what that is going to then do, or most of the time is going to do, is actually initiate that trend reversal, get us triggered into the trade, and then move down towards our targets. So as we can see here, we've been triggered in on this movement, and then when the market begins to move down, we profit from that on the way until it reaches our target in that demand zone. And that is a nice solid reversal trade, as you can see, following that concept that we spoke about already, with that higher high, higher low, higher high, lower low, and then the lower high is where we sell from. So can you see that going down on the chart right there? That is the move that we've been going for. So there you go. That is a nice example of a reversal trade. We've also just looked at a continuation trade. And those are the two types of trades that we take as traders and that we take within this system that I'm teaching you here. Now, what we're going to do now is talk about two other things that we can bring into our trading. Fibonacci, it's not something I massively use, but it can be very beneficial for choosing the right zones to sell or buy from, which can be one of the trickiest things when trading this system. And we're also going to talk about the fractal nature of the market, which I think is going to be a very beneficial video for quite a lot of you to actually understand why this system is so flexible and how we can use it on so many different time frames with successful results. From there, I'm going to show you a few examples of trades. I'm going to show you a high time frame continuation and a high time frame reversal, and then a low time frame continuation and a low time frame reversal, broken down using everything we've spoken about so far in a step-by-step process. You are by no means near the end of the technical section. This is just the first area where we're showing you the methods. And then once we've got all those examples out of the way, as well as those two extra videos I spoke about, we're going to go into the high time frame and then the low time frame application. So you can see how we put all of the things you've learned so far into practice and into the live market in a step-by-step process for swing trades and for day trades. So I hope you've enjoyed this video. I hope you are enjoying this section of the course so far, and I will see you in the next video.